Well, welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from a lovely little Westlake Village, California. It is bright, it is early, it is still dark out at 5:30 this morning. Sorry I missed you guys yesterday. I know you missed me and I missed you. But I want to talk about today the new narrative: buy the rumor, sell the news. And what I'm talking about is two things. One, the debt ceiling debate, and two, the Hong Kong shill coin fest that's going out on the internet webs. And man, I had some really good calls yesterday, but I was not able to get out a YouTube, so I apologize. But wanted to bring our attention to, I guess I'll start it off with TED Talks Macro, talking about retail investors can trade large tokens in a regime June 1st. Starting in June 1st, in 9 days, so ETH, Sol, File, Bitcoin, Atom, Matic, BNB, Litecoin, Link, AVAX, ADA, and DOT. These are included. So these are tokens eligible for trading in Hong Kong, included in at least 2 acceptable investable indexes from independent providers, one with experience in traditional financial sector. Whatever that means, sir. What I smell is a buy the rumor, sell the news type of event where everybody's thinking, oh, these are great coins, by the way. I mean, I like these coins, but not when Bitcoin's about to get shafted, and not when, perhaps, an index is different than a futures market. So traditionally, you'll probably have more people buying than selling, I would think. However, sounds like a buy the rumor, sell the news type of event to me. You buy the rumor, so maybe going into the event, these have some kind of a pump, but June 1st, and that's when the debt ceiling debate, whatever news is supposedly happening. Look, I'm so sick of hearing debt ceiling debate. If you scroll through your YouTube, all you hear is debt ceiling, debt ceiling. Well, I put out a little video yesterday on that, and I think that is the case. Low liquidity expected for June. The debt ceiling being raised is not what you think. It is more going to suck liquidity out of the private sector. Why the U.S. Treasury is going to be selling bonds, and not only are the countries around the world going to be buying these bonds, but so are the banks, and that means they have less money to lend to you and me, because why would they lend money to us when they can get U.S. Treasury bonds, which is a joke in itself. But let's talk about Bitcoin. We'll get into some price targets and some of the underlying market dynamics or economic data that's going to come out this week. Just reminding you, Tuesday, which was yesterday, today's Wednesday, it's hump day. Made it through the middle of the week, but yesterday, global services PMI and new home sales data came in hot. Today we have the FOMC minutes being released. Don't know what I'm going to expect from that, but I do imagine Powell is, going to continue to spank the market. Thursday, jobless claims and GDP jobless claims, GDP, and core PCE prices are going to be coming out. But jobless claims are going to be the main one to keep your eye on. And if that comes out hotter than expected, it's going to be bullish for the dollar and typically not good for markets. And then on Friday, personal spending, retail, we've got inflation expectations. Also reminding you, Michigan consumer expectations of inflation. Yeah. Today, also, Janet Yellen's going to give a speech. So we got the speech today and the FOMC minutes being released. And all right, with that said, let's jump into Bitcoin price action. I was getting a lot of flack yesterday for that $25,000 call. And, well, it's been one of these markets. Throw it in your face. Throw it in your face has been the name of the game. Up one day, down one day, and the bulls had a chance yesterday, but getting getting thrown back in their face by the silver cross to the downside. Once again, we have extremely low volatility. If we get expansion on the daily above 25 percentile, we should see, and that is going to be above this level. That's way up here. I mean, you could probably front run it, but 25% gets you the next 20% move. And where would 20% take you from this current level? Which, by the way, I don't know if it's going to happen. I don't know when it's going to happen, but when and volatility is direction neutral. So if the stochastic remains to the upside, we'll flip down today below 26,300, but 20% from today's level is going to take you down, down, down. Down to this level, 20%. So back to the bottom side of this little pivot right here at about 21,000. So the question is, are we going to bounce first off of the purple 200 somewhere around 25,000? Probably the case, as Bitcoin does not move in a straight line unless it was the parabolic blow off top from last year. So 12% moves in the last two expansions to the downside. And where would 12% take us? 12%? 23,000. So what would I be preparing for? Well, and where am I ready to just call it, where do you likely see this thing just droop down to that target? Well, 26,300. That level, taking out that wick to the downside, or this wick specifically at 26,657. Daily closure above or below there is going to get you that last move. Now, we did call this out, almost 2 weeks ago on the 3-day time frame, saying, hey, confirmed bearish divergence, the 3-drive variety coming back, more than that. The multiple drive variety, the very, very strong variety, but more than present, is 1, 2, I guess you call it 3, and that at least gets you a move down to the green 55 at 25,100. And does that put us in trouble in terms of the Gaussian channel? The Gaussian channel on the weekly time frame. If we do, well, look at the Gaussian channel coming in right at 25,189. So do we get a wick down there, a test down there? Well, I'd say odds are goosed in the favor of the bears. Odds are goosed in the favor of the bears. And what else plays into that narrative? Well, it's Mr. Dixie. Gaussian channel coming in at 104.80. If I take it off, you'll see that, we did call this one out as well. We wanted to see those 4 drives of hidden bullish divergence, which is price making lower lows, but the RSI making higher lows, coming back all the way from this pivot right here. And we had 1, 2, 3, 4, and that was the signal. Confirmed it right here. We had one more swipe down and then hit that 1618 fib to a T. I'm going to take off some of the lines here. And then I'm going to give you the picture. And I did say if we broke this range to the upside, likely Bitcoin would take that leg down to our $25,000 target. And just want to show you what that kind of looks like on the 1618 fib. Yeah, and now we're breaking it above it. And we're coming into the purple 200. Let's see on the weekly. Now you do have the silver cross present on the weekly time frame, but if we do close anywhere here or higher on the weekly, well, that begs the question, are we going to come up to the next level, which is 104 or 105 in this area? And where could we get that assumption? Well, back onto our main thesis here with bullish and bearish divergence, which was confirmed on this candle 2 weeks ago, or almost 2 weeks ago. But you have a slew of higher lows. And you have a slew, so I'm just going to mark that off. Can I get a little love here with my chart? So this low right here, I think it's more correctly done there. Got a higher low, higher low, higher low, higher low. And what do you have here? You've got on the RSI. How many lower lows do you count? 1, 2, 3. Gets you a shot to the green 55 or the top side of the range. Top side of the range is coming in at 105. And here's kind of the scenario that I would like to discuss. So a couple of ways to get the next downside target for the dollar. So why would the dollar go down when the U.S. economy is so strong and resilient from all these bank affairs like Mr. Biden has been proposing to us? Well, if we do reject here and close back below 101, I imagine the 6-month target does get hit, and that is coming in at 99 cents. That would be bullish, and that would be your bullish scenario for Bitcoin heading up to that $35,000 target. So if the dollar does break down, well, it's going to be, in my opinion, a little bit more bullish for traditional assets. Back onto the daily. However, the dollar has been ripping to the upside. And where does essentially we're pretty much at the 618, so wouldn't mind a little sell off here, a little come down as the dollar has had a pretty massive move. But volatility is beginning to decline. So as soon as we see this flip back down, well, I think assets may have a chance to rally. Essentially you expect a mean reversion bounce, and as long as we are above this pivot level, which is going to be the 618 to the downside. So as long as the dollar essentially is closing up, still above that range that we were caught in right here at about 102.33, then we'll remain bullish on the dollar. And it doesn't always have a direct correlation with Bitcoin. Just because the dollar goes up doesn't mean Bitcoin has to go down. It's just been the relative pattern here. As the dollar came down, well, Bitcoin went up for the first quarter of the year. Now the dollar has took one more leg down, and now it started to rally, and Bitcoin has kind of played back down to the bottom side of the range. So the question is, the rally over? Well, that's why we're going to be looking at all the economic data coming out this week: jobless claims, the CPI Friday, and inflation expectations. Overall, traditional markets looking a bit toppy, and again, the 618 coming in a little bit higher. So does this one have one more push higher? Perhaps, as I don't see any very apparent bearish divergence on let's see. Well, the weekly is going to have many drives as long as we're below this pivot right here. So any kind of a weekly closure, you're going to have 1, 2, perhaps we could call this 3. And I do imagine we reject the bullish control zone on the first pass here after being away from it for a very long time. Since December of 21, first pass is going to be a sell, and I would suspect that we come down. Well, if we confirm this, how many drives would that be? Let's see. 1, 2, 3, 4. I'd call it 3. So First target is going to be 1283 and second target is going to be 1204. And that's kind of the last line in the sand if you want to stay bullish on the NASDAQ. So how big of a drop is that? Well, down to here is 5%, down to here is 12%. And if it does lose this region, you know, the green 55, kind of the last range high right here at 12,693, that'll also be a good indicator that Bitcoin is going to take a leg down. Just curious, let's check out the S&P or see if we see anything on the 4-hour present right now. Low vol, to be fair, it looks like it's getting into a bouncy territory. The hourly volatility increasing. Well, it looks like it actually wants to come down a little bit more. And perhaps we base off of the 0.5. Nice little double top there. And where does that typically get you? Well, down to the 1618. We're breaking it right now. 4-hour divergence was present right there. Higher highs in price, lower high, boom, back in the bearish control zone for the bears to take over. Just checking in on actually another indicator that the dollar is going to stay bullish because the dollar is measured against a basket of fiat currencies. And bonds were skyrocketing yesterday, are pulling back a little bit today. And I heard Jamie Dimon say it yesterday, saying like prepare for 6%, guys, and the Fed to raise rates another 0.25%. And I think they do have one more rate hike in them this year. They have not caused enough pain for the market. But where are my currencies? Where are my currencies? Here we go. I'm looking for is it the pink? It is the pink. So we got the euro popping up today. Let's just check in on them really quick. So overall, big legs down on the euro on the weekly. We're going to have bearish divergence. No, you got a higher high. Well, you will have it coming back from this pivot right here, 2-drive variety. Looking for a move back down to the bottom side of the range as this top was confirmed on the weekly. The British pound, probably the same thing. Coming back, well, you could use this high or this high. And you got 3-drive variety back to the bottom side of the range for the pound. And the yen, already taking the leg down, already getting shafted here. And, bearish divergence again. 1, 2, 3, back to the bottom side of the range. And that could, minimum, I think that's where the target was. If you lose that area, next target down to doggy town, as we like to say, down to doggy town. So if all these currencies are getting slaughtered, that does play into the narrative that, the dollar is going to remain bullish. And we talked about the Chinese yuan. Well, taking a major leg down in correlations, that usually leads to stock market capitulation. And we did hit that target to a T over the last couple of days. The 1618 fib, if this area fails, the bears are going to have some control. And bringing it back to some Bitcoin and Ethereum analysis here on the daily. And I would... So there was a really clean for our divergence play. Coming back from this high yesterday. So again, 1, 2, 3, 4 typically gives you a shot to the 1618 on the 4-hour time frame, and that would be, if you're using candle bodies, generally this is going to be my target actually for today. Back to the bottom side of the range. If we can hold this level at 26.2, bounce off here, then the bulls will have one more chance. And that's probably what happens here, guys. Probably a wick down, pop back up one more time, and then throws it down. unless we get any more major bad news for the markets, banks failures actually has been prompting Bitcoin to rally. Where does this idea get invalidated? Well, simply a 4-hour closure back above 27.1, call it 27.1, or this 382 fib right there. And I would say another bear trap. Bull trap, bear trap, and momentum is still to the downside. Volatility is still increasing. Shorter term time frame on the hourly does say mean reversion bounce. So on the hourly, probably looking at a quick, any kind of an hourly closure back above here likely does get you that move to the green 55, and then she throws it back. 15-minute low volatility, and specifically probably looking at, at least a shot up to the green 55, and then it is, do we break the range or not? So short-term bounce, keeping an eye on economic data coming out here today, which there isn't much. So that does provide the impetus that Bitcoin could bounce. We got another 5 hours and 7 minutes. So perhaps we do get that little bounce on Bitcoin. And then the FOMC meeting comes out. Jerome Powell tells us the economy's way too hot. We're going to spank the market again. We're going to give it to you in, with the good old paddle. What I'm talking about is another rate hike. You can see Pulse X. The hexagons are getting slammed as it was a buy the rumor, sell the news event. Pulse is here. Pulse is here. Have no fear. Last thing I wanted to bring up before I end this lovely little video, 22 minutes in, so giving you a bit of a deeper dive into what I'm thinking in the markets today, as I missed you guys yesterday. Please go ahead and like and subscribe to the video if you haven't already. Hook me up with a little thumbs up on the video if you did enjoy some of the content. Ask a question in the comments below. And I had one more thing I wanted to bring up. I guess I'll save it for tomorrow. Well, let's see what gold's doing. We talked about gold, S&P. We talked about Bitcoin. We talked about all the relevant items here today. And just getting into our gold call. The nice call. We called gold, gold taking a move down to the green box. So is she going to pick herself up and show herself valiant? Well, as long as we were riding that 9 exponential to the downside, well, that is going to, mean pressures onto the downside. If you can confirm, if we can close back into this triangle, that's going to look good for a run back up, at least maybe to the top side of the range. And you will have some bullish divergence. How many clear higher lows do we have and lower lows in price? So that's 1, 2. So how would we confirm this? And 3 drives get you a shot back to the top side of the range. Essentially a closure above here on the daily. Yep. 1993. If gold can close back above there, I'd be looking for a shot back to the top side of the range. Other than that, another indicator that perhaps gold is going to rally in everybody's faces and we do not head down to that lower target would be a closure back above this level at 20,032 on the daily, and gold's going to be looking bullish again. But we are not out of the woods when it comes to gold, and silver did hit our target to the downside. So is she going to bounce? And to be fair, does look like bounce is getting ready as we are crossing back up in the critical zone. and basically just waiting for a closure. I mean, probably gets a wick into this area, but a closure back above here will essentially get you a confirmed low and a mean reversion bounce. Where do those mean reversion bounce targets come in? At the 618 and the 0.5. So as long as silver is below this region here, which is our little green box of peace and prosperity or death and despair, and I will throw that in there. So peace and prosperity right here, death and despair. You know, not what I would like to see in the epitome of a clear stop and reverse point is more right here. So let's just mark that off and see if we can see any, if we can squint and see any divergences, as there is your, you know, maybe pivot. You could talk about a low there, but silver's going to do whatever gold does, but more, and then the RSI. So that would give you two drives, 1, 2, perhaps on a candle body closing basis. Well, here's a low. So that could give you the 3 drives and, yeah, a shot, you know, into the green box. How would you confirm it or front run that signal on silver? A daily closure back above this pivot at 2366. So silver, well, let's keep an eye on that one. Looking like a bounce sooner than later. And yeah, 4 hours says up. You probably got some divergences playing out there. So if gold and silver are any kind of an indicator for Bitcoin, you know, gold has, well, Bitcoin has been rallying alongside gold. That is a point for the bulls. If I had to give you any points here, notice the fear and greed index at a neutral, and funding rate's slightly positive, so you're paying to go long right now. And open interest is still at that $8.38 billion level. And really for another big swing down, you want to see open interest probably come up to around, that doesn't, oh, it's saying 8 billion. So it did come down. Last value. Today it's 8 billion. Okay, interesting. So interest did come down a bit today as, well, people got liquidated. I'm sure people got liquidated from yesterday's candle body closure. And I did call it out on our live stream yesterday saying, look, probably going to throw it back in our faces as the day closed like this. It looked like it confirmed, yeah, confirmed a low on this candle, and then thrown right back in his faces. So do we get one more chance today to pick it up? That is the question. Any kind of a 4-hour closure back above that pivot at 26.8. You're probably going to have some bullish divergence. Yep. Coming all the way back from this pivot. You'd have 1, 2, 3, 4, and yeah, that could really do it. That could, you know, so 4-hour closure back above here confirms this as a low, and a minimum looking for a shot to the top side of the range. And on the other hand, you know, that 1618 fib is going to come all the way up here to 26,809. That will give us a tick below, you know, above this high, and that could be good for the bulls. That could be good for the bulls. Anyways, I'm done here. I hope you enjoyed the video. Again, give us a thumbs up. Consider giving a thumbs up if you do enjoy the content, and have yourself a blessed day. Take care.